In February 2024, I started a $2 million prop firm challenge where today I'm 1.6% up on the account using a simple mechanical rule-based supply and demand strategy that has gotten me to over $33,000 up on this evaluation. And the same strategy that got me over $1 million funded in 2023 alongside hundreds of my members in my community. In this video, I'm going to break down my exact supply and demand and order flow strategy so that you can go and copy and paste this, backtest this yourself, and apply it in your trading to become funded and consistently profitable. Hey, what's going on, awesome people of YouTube? My name is Jay. I'm a full-time online entrepreneur and prop firm trader that documents my trading journey on my MM Funded YouTube channel for you guys to learn how to understand price, how to backtest properly, how to collect hardcore data to prove your edge in the market, and to ultimately become your own independent, consistent, and profitable trader. Now, before we dive into the exact trades that I've taken on my $2 million evaluation, I first want to give you guys some simple insight into the exact strategy and the higher time frame narrative on how I execute my trades. My entire system consists of refining price all the way up from the weekly down to the 1 minute. So I'm a very conservative, low win rate, but very high risk to reward trader, meaning I'm 100% happy taking a 10% win rate, but running 1 to 20 risk to reward trades. So that means the 9 losses that I take in a row, that 10th runner that I perhaps take is a 20R, puts me in over 11 risk to reward profit. Meaning if I risked 1% per trade, even with a 10% win rate, I would still be up 11% on that account. Once you start to approach price in the narrative of risk to reward and percentages rather than pips and monetary gain, you will soon start to learn that win rate becomes completely irrelevant in this industry. One of the main concepts that I apply in my trading strategy is the use of order flow, identifying where money lies in the market, identifying the high valuable points that have created a break of structure in the liquid asset. On any liquid instrument, if there is hard selling or buying power that can create that break of structure on that liquid instrument, becomes a very high valuable point of interest and a very good probability for price to fulfill orders in that area of interest that has created that break of structure on the liquid asset. Those areas of interest we call institutional levels, or a simpler term, supply and demand zones. Most of you trade supply and demand zones incorrectly. It is impossible to trade price solely based off supply and demand. Supply and demand is not enough to complement your trade and doesn't give you that overall clear picture and understanding the direction and the order flow of price. It needs to be paired up with what we call our structure or order flow story and identifying our weak draw on liquidity points and our strong protected liquidity points. This concept alone will shift your entire perspective on trading and immediately put you on the right side of price every time you hop into the charts in the morning formulating your trade plan. Starting off with the first step in my trade plan consists of a very mechanical, rule-based and simple way of identifying this order flow and the structure story of price. I operate on 4 mechanical timeframes. My daily time frame for my higher time frame and narrative, my 4-hour time frame, which is the internal time frame of the daily, and my 15-minute time frame, which is my fractal time frame of the 4-hour and the daily, and my 1 minute or 5 minutes for execution confirms inside of higher time frame, supply or demand zones. The order flow of price operates in 3 different forms of structures. Our swing structure, which is the strongest form of structure, our internal structure, which is all of the smaller structure that occurs, which is all of the smaller structural movements that occurs inside of our swing structure, and our fractal structure, which really consists of every break of structure that happens within each and every candle that we solely use for confirmations inside of higher time frame POIs in alignment with our internal and swing structure story. Starting off with point number 1 in my trade plan is firstly to identify my swing structure. Immediately, I will come over to the daily time frame. I will backtrack and identify clear highs and lows. Previously, we had a previous low, broken structure to the downside with a candle body closure. We need to find the highest point after the pullback, after the previous break of structure that created the next break of structure, being this high over here. After every single break of structure that occurs on price, we can expect a pullback phase. The reason why price does this is because price cannot move in one direction 24/7. It moves in the movement of buyers and sellers consistently battling each other for the most orders in the market. Once the sellers completely overpower buyers and create that liquid break of structure to the downside, these sellers cannot make money forever continuously selling price. There needs to be a rebalance of the supply of sellers to fulfill demand buyers, which is the reason why price incurs these pullback phases after every liquid break of structure. After our previous break of structure, we incurred that pullback phase, mitigated an area of supply, rebalancing demand to continue in the direction of the anticipation of order flow to target our weak lows. The reason this becomes a weak low is because this low point didn't break structure and didn't break any previous strong high or strong low. So therefore, we've now created a new break of structure to the downside. The highest point after the previous pullback that created the next break of structure becomes our strong high. Mitigation into the higher time frame weekly structural range. As our weekly structure break occurred with our previous strong lows, our weak highs after that pullback phase started. So we know the anticipation of the weekly is to respect these strong lows and eventually target our draw on liquidity weak highs. So therefore, what can we immediately tell based on the weekly and the daily? Well, the anticipation is for price to respect these strong lows. So therefore, the daily internal of the weekly cannot continue forever bearish. We can eventually anticipate the daily to start shifting bullish to realign with the overall weekly context to target our weak highs, which is exactly what occurred. We had our mitigation into the weekly extreme demand that created the previous liquid break on the weekly time frame. So therefore, after this mitigation, yes, although the daily was bearish, these supply areas become completely invalid and trapped out millions and millions of dollars worth of traders' capital around the world trying to short gold on this bearish trend. Whereas myself and my community members inside of MM Funded, we were all long on price targeting these weak highs ever since October and November 2023. And in this period, I caught my record trade of 120 risk to reward. Weekly weak low, broke structure to the downside, price starts the pullback phase. Instead of price respecting these strong highs, we broke structure to the upside. So now what changes? Our previous weak lows now become strong lows because this weak low has now created the break of structure to the upside and took out a previous strong high. So therefore, this now becomes a strong low. After the break of structure, what can we anticipate? Is the pullback phase to start of older areas of supply to still rebalance demand? We then started that pullback phase. Mitigation into daily demand, our smaller internal structure confirming so that we're ready to target our daily weak highs and our weekly weak highs. So in this scenario over here, once the daily started to realign with the overall weekly and the internals inside of our daily time frame realigned, we are in a very positive bullish market, almost guaranteed to target our draw on liquidity weak highs, which we continue to target those weak highs, create the new daily break of structure to start the new pullback phase, creating new strong lows, new weak highs. And even in this point of time, after this weekly liquidity sweep, I saw thousands of traders all over social media sending signals to short gold, trying to short gold, flexing all of their gold shorts. And as of today, all of these traders have now been liquidated out because these still remain as strong lows and weak highs. The anticipation of order flow is to target these weak highs, which we did 3 months later. So therefore, between November and now, as of the beginning of March, I haven't taken one short on gold. I've only been long targeting the weak highs, and I will show you these trades just in a bit on my $2 million funded challenge. All right, so from the daily being our swing time frame, we can come over to the 4-hour time frame, which is all of our internal structure that occurs with inside of our daily time frame. All right, after the previous daily break of structure back in October 2023, the 4-hour internal created a strong low that created the break of structure to the upside. New break to the upside, pullback started, But what can we anticipate? Well, purely because the daily time frame has created a break of structure, we know that a pullback phase has started. How we confirm the start of those pullback phases is the mechanical rule of your internal time frame of the swing structure of your daily needs to shift bearish to confirm this as a weak high. So although the 4 hours shifted bearish and this becomes a 4 hour strong high, it doesn't mean that price is now ready to continue all the way bearish. Purely because of our higher time frame narrative, this bearish shift just catered for the daily pullback phase with the anticipation to still target these weak highs. So therefore, all of these supply areas that created the breaks of structures, that holds your liquidity, that created the 4 hour swing break, that created the inefficient pushes, whatever rules that you have in terms of your ICT setups, became trap outs for what I like to call smart dumb money traders, which again, millions of dollars were lost trying to short XAUSD after what you would perhaps call this 4 hour change of character. So with inside of this internal M15 shift to the upside, the internal time frame of our 4 hour being the M15, which we're going to hop on just in a bit. Okay, we had the M15 shift to the upside, beautiful demand chain forming an opportunity to target our 4 hour weak highs and also our overall daily and weekly weak highs. And this was the trade that we caught inside of this demand area back in November, where we actually caught a 1 to 120 risk to reward, targeting these swing highs refined all the way to the 1 minute inside of here. And we'll recap that just in a bit and all of the other trades that I've taken on my $2 million challenge. Okay. So after the 4 hour break of structure, what can we anticipate is the 4 hour pullback phase to start, which we identify and signal with the internal M15 shifting to the downside. Last, M15 strong low that took out the previous week high, new break to the upside, pullback started. Instead of respecting the strong low, we broke structure to the downside, creating new strong highs and marking this out as our valid 4 hour week high. So all of this bearish momentum is just catering for our 4 hour swing pullback phase. We can anticipate price to pull back at least into the discount of this overall swing range, which we did beautifully, mitigated a beautiful demand zone with double bottom liquidity, inefficient push, and created the overall swing break. Internals confirmed bullish, continued bullish for quite a while. Again, still looking to target these new record and weak highs. I took lots of longs with inside of this bullish leg. Most of them were losses and came back to BE, which again, I'm 100% happy with, and still came out extremely profitable in November. Because this 120 risk to reward trade means that I can take 118 losses in a row, risking the same percentage that I risked on that trade, and still come out profitable in the month of November. And that's the beautiful thing about understanding this game as a percentage and risk to reward game. Win rate is not relative whatsoever. So fast forward, we formed a bit of a internal range, just bouncing back and forth off demand and supply throughout the period of mid-December to end of February. And then as March really started, we again shifted internally bullish, aligning our lower time frame with our overall higher time frame narrative to target our weak highs, which we beautifully did as of the 5th of March, now previously a day or two ago. And where we were taking longs this week with the community coming all the way over to the M15 time frame. All right, our M15 created our break to the upside, and this is what I was anticipating the whole of 2024 was for this M15 to shift bullish, creating new strong lows, to follow through our M15 internal to target our M15 week highs and our overall 4 hour and weekly week highs. Okay, so after the M15 swing break of structure, what can we anticipate is an M15 swing pullback. How do we identify that? The M15 internal needs to shift bearish to confirm so. But we never had that. We just had a pause in price action and our internal continuing bullish. Okay, and coming back to the first trade that I took on XAU USD, this week was a long position after a pause in price action, fractal break of structure to the upside, price overtakes supply, puts demand in control, took a pullback entry, AMD entry confirmation, which all essentially is on a 1 minute time frame, is mitigation, reaction, ideally some kind of range, even a fake change of character, and a sweep of that low. Then a displacement FVG entry to confirm our overall model of distribution. So there we go. In the last 10 seconds, I've given you probably my most successful entry model confirm that I've used in my 6 years of trading. It's called Wyckoff or AMD, which is discussed in a full 3-hour webinar inside of my Discord server. So coming back to this entry model, we initially were stopped out for -1. Price didn't come back for a reconfirm, which is 100% fine. I let price play out. I wanted to see more of a structural story. Again, another pause in price action, fractal break to the upside, 15-minute change of character confirm to follow through price to our internal weak highs for a 1 to 14 or 15 risk to reward, which was a full runner on the $2 million account. So even coming to price this morning, we're still internally bullish with our strong lows, our previous break, our liquid break, our weak highs after the pullback has started. So demand areas is still in control. And I'm more than happy to follow through XAU USD bullish and react to this until we internally shift bearish, where we can start to ride more of the higher time frame pullback phase. One life-changing note that I want you to write down and that you will notice in the way that I teach people how to trade. I've created hundreds of funded traders through my funded community. And this is what I want to leave you with. And we're not done with the video yet, don't get me mistaken, is I want you to start learning to react to price rather than trying to predict. That mindset shift and perspective completely changed my entire trading career, going from losing accounts, only being able to trade smaller $100, $200 accounts, to consistently getting funded and consistently getting those payouts. There was a period in 2022 where I lost over 24 prop firm evaluations in the period of 6 months. I lost over $30,000 because of purposely trying to buy low, sell high, trying to predict the pullbacks, trying to predict the bull runs, and just trying to predict price. I had no understanding, no clarity on the understanding of how supply and demand and how the money and algorithm of price works. As soon as I started to learn how to react to price instead of trying to predict, I immediately went from F- or D- trade plans to A+ and A- top quality trade plans. And that was the period where I got funded and paid out for the first time, which was a click and a mindset shift that changed me for the rest of my life, purely because I now realized this is possible. I've done it. And if I can do it once, I can do it again and again. So coming over to the trades that I've taken on my 2 mil evaluation, I'm predominantly an XAUSD trader and a EURUSD trader. Now and then I'll look at other pairs, but the beautiful thing about understanding structure and supply and demand and the movement of order flow, you can hop onto any chart and understand it your first day by just looking at price action. And one thing I will tell you is it doesn't matter what pair that you trade. Every single Forex, commodity, futures, indices, cryptos, any market that has buyers and sellers, money is going to move in the form of supply and demand and liquidity draws and overall order flow, because price needs to constantly rebalance supply and rebalance demand. That constant battle between buyers and sellers in price. So therefore, I sometimes hop onto US30. I love USD JPY at the moment. Beautifully bullish, anticipating still more of a bullish run. I've been long and also interim short on UJ in terms of the higher time frame narrative. The most recent trade that we took this week on XAUSD, which we also had a long 2-hour, 3-hour live stream with my community. I'm live streaming every single day, going over full top-down analysis, working with you thoroughly every single day to get you funded. And the trade plan that we discussed was still to continue long on XAUSD to target our 4-hour week highs. Back on Tuesday, just before London session opened, we had a slight pause in price action. All I was waiting for was demand to overtake supply, put demand in control, which we had with the structure shift to the upside. Demand in control, I was more than happy to start looking for confirms once price mitigated the discount of this entire fractal range. And the reason why I like to look for longs in discount is because institutions and banks around the world want to buy demand at the cheapest price possible. That's what we call demand. And sellers want to sell price at the most expensive prices possible. That's what we call premium. So therefore, it's always highest probability to start looking for longs off demand ranges that are inside of the discount of your overall higher time frame swing ranges. Okay. Simply look for my 1 minute confirm coming over to the 1 minute time frame just to get that ultra extra super refinement to get the tightest risk to reward as possible. So all I really look for over here, and my entry confirms basically consist of an ICT model, inversion gap failure, an inversion fair value gap after a liquidity sweep. So we had beautiful resting M15 liquidity, which was also our Frankfurt session and Asian lows that we swept into this higher time frame S&D zone. One thing I will tell you as well, a supply and demand zone that holds previous day or Asian session liquidity holds really good value. Keep that in mind. So we had a sweep and draw on those previous day sessions to mitigate our higher time frame demand. All I was looking for on the 3 minute time frame, we printed our most recent fair value gap of the last series of 3 candles that mitigated this demand, which was this gap over here. Immediately on this candle body closure above this gap here, which the candle closed up here, I put my limit just on that same failed gap, becoming a new inversion gap that shifted from bearish to bullish. My limit was set on that gap, stop below the low, targeting our structural weak high of the higher time frame, allowing us to secure a total profit. Our stop loss was at 213399, more or less at that point, which was an 18 risk to reward on this trade, which was my most recent trade that I've taken on my 2 mil account, which was a total profit of $17,686. I want you to notice what I also spoke about in the beginning of this video, how win rate is not relative to me at all. So on this account, I'm up 1.6% and $33,000, but with a 20% win rate. That means out of every 10 trades, I only win 2. Some of you may think, how on earth is that possible? You're losing most of your trades, but you're making huge monetary and consistent percentage returns. Well, this is exactly how you need to approach trading in order to become profitable, and approach it as a mathematical game, not a monetary dollar game. So we've had an average risk to reward of 17%, quite a couple of losses on EU as well. I've been long on EU ever since this 4-hour break of structure to the downside, riding those phase C pullback longs. Eventual anticipation still to target those weak lows, but we'll do that once the internal starts to realign bearish. I took a couple of longs in here, which I was swept out. So this was the period in time where I took a -1 and a -1 on EU, and also a -1 on UJ, which on average I lose anywhere between $900 and $1,300 per trade. But I'm winning anywhere between $16,000 and $20,000 per trade. And that risk to reward is what keeps me consistently profitable. And this is the mindset that I want you to install in you, is that your losses is the reason you are profitable. You need to fall in love with your -1s. You need to fall in love with your losses, because if you're not ready for that, my friend, be prepared. Trading is not the industry for you. The reason, and the only sole reason that you can become profitable in trading, is purely because of your losses. Shift yourself into that mindset and you will slowly but surely see the difference in your equity curve. So continuing with this, the number of trades I've taken on this account, only 10 trades, 2 wins, 8 losses, and I risk strictly 0.1 or even up to 0.2% per trade for usually a 1 or 2% return. And that's how I trade. So I have more than enough room to take 20 losses in a row. And my 21st trade can be a 30-hour runner, and I'm still up 1% for that month. And that is the type of trader I am. I'm a very conservative trader. I love trading with the large capital accounts, $1 million, $2 million accounts, but only focusing on 1 to 2% return a month, rather than trying to squeeze and hardcore trade 10 or 20% out of a 100K account, which at the end of the day is the exact same amount, except you're trading 20 times more safe. If you guys want to join my full 0 to 500K funded trader program and mentorship, I charge $59 for it. It is my full Discord server where I've got full Section 1 access to Section 7 and all of my live streams recorded as well. So there's hundreds of hours of content over here. The course content is in a very specific chronological order for you guys to go from the real basics to fully understanding this mechanical system, just understanding the basics of supply and demand, zone refinements, wick zone, zones, understanding mitigated versus unmitigated. So as you can see, the real basics. Section 2, going into the mechanics of 3 structure types, our mechanical phase A to D model, the lowest probability and the highest probability phases to be trading in, and our 3 structure types put together also in a chronological method over here. Section 3, specifically going over liquidity, session liquidity, previous day session liquidity above supply and demand zones. Super valuable section as well, as it will help you in mechanically identifying your highest probability SND zones and institutional levels. Section 4, going off pure entry criteria, the OTE fib, my favorite AMD, my also favorite, the AMD inversion gap, Wyckoff Triple M, flip zones, standard change of character. Section 5, going over AMD in detail, being Wyckoff, our last point of supply, the UTAD, the UT, the spring, the UTAD test sign of strength, all of that discussed in a long, thorough 50-minute video. Section 6, pure risk management, and also my trade manager tool, which allows you to execute trades based on pinpoint perfect risk percentage based on your stop loss and TP, so that you never are off of your data return. Case study research, live trading on FX Replay, my London webinars, hopping onto session with my guys every single morning, and then also my free YT mentorship on YouTube, which is super important to pair up with the core content inside of MM Funded. So here are my live streams every single morning, 9 o'clock GMT +2. My US session partner who trades the US session also streams at 3 p.m. So this is a very active community. MM Funded has become like a family to me. There's over 1,000 members in MM Funded. We have created, I think, 5 funded traders this year in 2024. A few guys have gotten really good payouts, and of 2023, I can scroll up and up and up and up and up and up and up forever. We created close to 100 funded members in 2023 alone, which was when we actually started this program. One of my members got close to a $20,000 record payout on their specific prop firm. So yeah, guys are absolutely killing it. We really focus on, the guys are absolutely killing it in MM Funded. I'm not just trying to upsell you this Discord community. I'm actually showing you what quality and close to 7 years of effort is put into a trading system. If you guys would like to join my Discord community, please message me on Instagram. I'll also leave a link down below in the description of this video. But if you want to chat to me first, message me on Instagram. If you have any issues with trading, in terms of technical analysis and psychology, send me a message on Instagram. I'll be more than happy to help you out. What I also recommend you do is, if you guys specifically want to learn why the algorithm of price moves in the form of supply and demand, I've created a very in-depth 21-minute video diving into the back end of the charts, diving into every single order that is placed on the charts. It will give you a super reasonable and epic clear understanding of why we do here what we do at MM Funded. Make sure to click on this video over here, and I'll see you over there.